Hey everyone, welcome back to my channel, Addie P's Real Estate Tea, where today I just want to briefly delve into the differences between a mortgage deferment, a mortgage forbearance, loan modifications, and also lightly touch upon some renters relief, some renters assistance relief, excuse me. So before we get into this video though, remember to please, if you like what you hear in this video and you want to help your girl out, help her YouTube channel grow, please hit the like button. Also, don't forget to hit the subscribe button so you can get access to all videos that I do that are real estate related, both local and some things on the state level and national level as well. Also, hit the bell notification to be notified of future videos on this channel. And you already know, if you're watching from Instagram, drop me a heart and show your girl some love. All right. Now, again, just want to briefly get into the differences here in forbearance, a mortgage deferment, loan modification, and again, this rental assistance program that I just heard about this morning. So with a mortgage forbearance, basically, you know, we are going through this whole pandemic. Lots of folks are losing their jobs and or being laid off and furloughed at the time for the time being. So if you find that you are one of those folks that are in that unfortunate situation, there is a legislation and rules and so forth out there built into the CARES Act, which we'll briefly touch upon that in a moment here. But you contact your loan servicer as a homeowner who has a mortgage, and you explain to them your situation. And one of these things may apply to you. They may say to you, hey, we can offer you a forbearance. Now with a forbearance, basically it's a reduced or skipped or missed payment that they would allow you to do. With the forbearance, however, let's say your mortgage is $1,000 a month, and they would have a set period of time and say, okay, well, looks like and we'll give you 3 months in order to get us this money for this mortgage payment. Okay, well, at that 3-month period of time, once that ends, they want that $3,000. And more than none, with forbearances, the interest payment will not be waived. The loan will still be accruing interest during that period of time. So hopefully within that period of time, using that 3-month period of time as an example, you have either gained your job back or gained other employment, so that way you can pick up with that mortgage payment. However, some folks with forbearances have experienced the fact that at that 3-month period of time, they're not in any better condition or shape job-wise and financially to make that payment than they were when the payment arrangement was set in place. So forbearances can be a bit tricky. Now with deferments, however, they tend to be a little bit more lenient in the sense of same thing, either reduced or missed payment that is granted to you for a certain amount of time. However, what they can also do with a deferment is tack that payment on to the end of your loan. So that can be of benefit to you in the sense that, again, that using that 3-month period of time as an example, that comes about and okay, I don't have a job still, I'm still in a bad financial situation. At least that way, you know, those arrangements can be made that that payment is tacked on to the end of your loan, thus maybe extending the term or the length of your loan. So, and during that time with some deferments, the interest on the loan is put on pause. So it sounds like it's a little bit more beneficial with deferments. Again, please, I'm not a mortgage officer. if you are in this position, please check with your loan officer, your loan servicer about this, so that way you can see what specifically applies to you in your loan. Now, with loan modifications, basically you are, if you're approved, because they do kind of go through quite a few steps with you with a loan modification, and review your income and so forth. You have to prove that you have a hardship, and similar to the first two, the forbearance and the deferment that I just discussed, they want to make sure that there is a genuine hardship here, that they can make these changes on your loan. Now, with the loan modification, they would review all of that and basically, as it states, modify or make changes to your current loan. Maybe a change in the payment, could be a change in the interest and so forth. Now, with loan modifications, that can negatively affect your credit depending on if you've missed payments, if you're behind and so forth. So again, these are things that you want to check out if you are in this position with your loan officer or your loan servicer. I know with doing short sales, that's usually kind of the first step that some of the loan servicers want you to take, is to indeed go through a loan modification process to see if that's something that is beneficial for you first before going on to the short sale process. And if you guys want to know a little bit more about short sales, drop me a comment below, let me know, and I'd be happy to do a quick video on short sales as well. So all of these payment, deferment, forbearance, and so forth is laid out briefly here in the CARE Act. The CARE Act is part of the whole stimulus package that was pushed out. It outlines everything. The stimulus checks that we hopefully everyone has gotten or they're on their way. It kind of lays all of that out. So basically, in this CARES Act, it lays out the fact that forbearances and deferment payment options can be delayed for up to 180 days on government-backed loans. So if you have a loan, say FHA or VA loan currently, and you're needing some kind of payment arrangement like a forbearance or a deferment, and you have one of those loans, you can have up to 180 days per this CARE Act. Okay, now servicers that are backed federally, what they're saying is that also, say you are a landlord and you have a FHA or VA loan or whatever the case may be, and you're renting your property out, that your tenant, if they're having issues with paying you and they're behind. So this is something for renters as well to keep in mind, that you have a certain allotted period of time. And I believe that that is it is 120 days from March 27th, which is the time period that this was enacted, 120 days from there to be free from any eviction. So the landlord, if they have that type of loan on the property, so that applies to single family and multifamily properties that are federally backed mortgages, that they have federally backed mortgages on them. So again, renters, keep that in mind if you are in a hard way and so forth, that's an option for you. And for our homeowners, our owner occupants that have federally backed loans, same situation in regard to if it's a VA, FHA loan, whatever federally backed loan you have, that you have that period of 180 days in order to have this your loan servicer contacted, and you either get the forbearance or the deferral. So there are some options out here. I think a lot of folks are a little bit afraid because we dealt with a lot in 2008, 2007, 2008, when the market took a turn for the worse, and a lot of loan servicers at that time did not have things in place. So it was really a scary scene, and we really dealt with a huge crash. But as I talked about in my last video with the housing market, a lot of industry experts are anticipating that this particular market shakeup will be straightened out by the end of the year, and it is strictly pandemic based, is what the market experts are discussing and saying and so forth. So let's keep an eye on it, but let's also, as borrowers, as renters, be proactive in making sure that we're contacting our landlords, saying, hey, look, I need to make some arrangements with you. Let's not just sit back and say, oh well, I'll deal with it later. This is a vacation that I needed, and I got some free money in my pocket from this stimulus check. Let's not do that. Let's be proactive. Let's be responsible. Let's care about each other. Let's work with each other during this time. Now, lastly, I just wanted to briefly touch upon also something for renters in the Allentown, Bethlehem, and Easton metropolitan area. An article came out in Morning Call, and I will put a link in the description box for this article. But basically, it states that because of the CARE Act, there was some money allocated to Allentown, and they in turn are taking that fund and providing rental assistance to low-income families. So, of course, there are income requirements, criteria. You have to have been affected by the pandemic, or some other items on here. If you were facing eviction, or you will be facing eviction soon, there is quite a few things there. Veteran, senior citizen, 62 years of old or older. So it outlines those some of the criteria in that article. But basically, it is up to $3,000 per household that you may qualify for if you fall within this criteria to get assistance for your rent. So definitely take advantage of that if you find that you have fallen on hard times, especially due to this pandemic. If there's uncertainty whether you're going to get back to work or you're not going back to work at all because of this, you definitely want to take advantage of that. So like I said, please, 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 I will have that link in the description box for you all to take advantage of, look into it. If you qualify for it, great. If you know someone who may qualify for it, great, even better. So again, please, folks, stay safe. Please continue to stay quarantined and stay blessed. Until the next video, take care.